Hello everyone, welcome back to VAT in Shorts by WTS Dhruva. In this video, we talk about three issues around insurance industry. To begin with, recovery of input tax on third-party cost. In case of insurance of movable property such as plant and machinery, motor vehicles, etc., there is always a question who is eligible to recover input tax on third-party cost relating to repairs or replacements. Where supplies are made to the insured can recover input tax subject to normal recovery rules. It is relevant to mention that where the payment to the third party is made by insurance company, the insured needs to comply with provisions relating to intention to pay. Further, the claim to the insurance company will be made exclusive of VAT if the business is fully taxable. Where supplies are made to the insurance company can recover input tax subject to normal recovery rules. In both cases, who is the actual recipient of the repair services needs to be clearly established from the policy document. Another question that is more relevant for insurance companies is whether they can justify that goods or services are used for making taxable supplies. At an individual policy level, the value of claim may far exceed the premium amount and hence input tax availment may sound a bit absurd. However, one needs to be mindful that premium value is a complex calculation undertaken by actuaries after factoring the potential claims that would be payable to the insured. Therefore, it could be said that these are business expenses and hence should be recoverable. Travel insurance. The VAT treatment of travel insurance has been a contentious issue. In terms of the UAE VAT law, ensuring the international transportation of goods and passengers is zero rated. FTA in September 2018 clarified that travel insurance would be standard rated if the recipient is resident in UAE and zero rated if the recipient is not resident in UAE. The intention of FTA seems to indicate that insurance of only the actual transport of passengers undertaken by the airlines industry is zero rated and not the travel insurance provided to passengers. This essentially could mean that all travel insurance services provided to the passengers, even though it includes the actual transportation, is not zero rated. A similar view has been taken by Bahrain. One may say that zero rating provisions for service of ensuring the international transport of passengers are not implemented completely and are superfluous to some extent. The insurance industry could approach the Ministry of Finance to get the law amended and make travel insurance zero rated. Third, reinsurance claim. Reinsurance is a common phenomenon where an insurance company cedes its risk to another insurance company for a premium. Insurance claims, or for that matter reinsurance claims, are outside the scope of VAT. So, are there any VAT implications on account of such claims? It may be noted that in terms of the UAE VAT law, input tax on out-of-scope supplies can be recovered only if the said supply would be taxable had they been provided in the UAE. Since claims are outside the scope of UAE VAT law, the input tax could be restricted. There could be some implications around input tax apportionment if a taxpayer is making exempt supplies. We hope the video was useful. Thank you. Stay tuned for more.